Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. And let's start the show about the company which we'll be getting today. But I'll give you some hints, and it's a very interesting company. It's the first shipyard of independent India to build a warship for Indian Navy. That's a big hint I've given you. The second one is it's based out of West Bengal. You must be coming very close to the company now. And also interestingly, the stock has given 1165% return in the last 5 years. And of course, their peers also include bigger names such as Cochin Shipyard and Mazgaon Dock. This can't get much easier than that. It's like walking in a garden, to be honest, and that's also a hint. And the stock in focus in the defense space, shipbuilding, is Garden Reach Shipbuilding. That's the company which we are talking about, and we'll talk about the company in detail about what the outlook is for the industry and the company going ahead. Also, remember why we are getting this company. That's a very important question. The company came out with its Q3 numbers also, and that's the key reason is what led to the strong Q3 numbers. Is it the execution? Is it the margins? That's what we'll be looking at. Another important question will be, of course, the guidance. There is an operational leverage at play, but will the margins go ahead? But there are some concerns also, and that's why we are calling the company is the execution risk that is concerning the entire industry. Has that stopped a bit? And that's what we are seeing in the stock prices also when we compare this space. The order outbook and the guidance, that's the outlook we are looking like for the order book. And of course, the management seems to be very confident when it comes to the order book. The next generation contract on corvettes. Corvettes is a type of a war building ship. It's a bit smaller as compared to the larger ships, but nevertheless, a lot of this is manufactured by this company. Also, let's look at the long-term manufacturing capacity expansion plans. What's it going to be? Will it be brownfield? Will it be greenfield in Kolkata? We'll be looking at all these parameters as well, and that is why we are calling this company. And on the show is going to be Commodore PR Hari. He's the chairman and MD of GRSE, where he will be asking or actually answering all our queries today. But let's just give into the about the company. What's the key details like? We know about it, you know, the people tracking the mid-cap space, the analysts, and even you must have heard about this company. But I'd like to get into a detail about it. It's a defense PSU for the shipping industry. And the second important thing is it's a Schedule A mini Ratna category company as well. We have seen the entire defense space showing a lot of interest both in terms of orders and retail space as well. And remember, it's the first shipyard of the independent India to build a warship for the Indian Navy. There is a lot of history behind this, and this is the only Indian shipbuilder to have 4 distinct shipyards as well. So you see the history is so rich of GRSE and of course the Indian shipbuilding industry, and they have built over 800 platforms including 115 warships for the Indian Navy. That's a very big achievement. And also, if we talk about the other important factors, these are the products which the company deals with. There is frigates, there is corvettes, there is of course fleet tankers and landing ship tank. So it's very much interesting for even a child who is understanding this in KYC about GRSE. But the key products, of course, are the land craft utility survey vessels. That's what we would be looking out for. Also, apart from this, there are offshore patrol vessels and fast attack craft, and more these products should be coming in as, you know, defense becomes a very major theme. And of course, the security of the nation is the paramount for GRSE. But Q3 numbers is important if you're tracking the markets. Q3 sales were near its peak. That's where the concern comes in. The numbers were good, but is it peaking too early? The revenue surge is led by a bell curve execution cycle. That's what the brokerages are talking about it. And the concerns definitely are there, whether the peak is there for FY27 when it comes to the sales. Inflow pipeline is robust, but it is distant. It might take some time. If that happens, the cash flow conversions, that comes less because it's a long gestation period business. And the order book stood at roughly 20,200 crores. It was down 7% on a sequential basis, and that is where the concern starts coming in. Remember, these entire pack of shipbuilding were very high valuation stocks, and though most of the valuations have corrected by almost 50-odd%, margins have improved due to the operating leverage that will definitely give to the company's performance. But going ahead, currently the execution part, if you look at it, the management guidance, they're having 10 major shipbuilding projects. So we will be talking about this as well from the management. Looking at the ship repairs, portable steel bridges and naval weapon, that's a new area where the management has stated that the business is good. Also, apart from that, let's look at the next generation corvette contract. That is also on the anvil. So we will be asking the management about the timeline about this important contract and the number which they have given in their presentation in Q3. They want that 50,000 crore mark of order book ending in financial year 2026. That's just 2 months left. So that'll be pretty much a steep hike, coming in from the company itself. Two developments coming in. They have signed a 33 crore order from Ministry of External Affairs. Also, they have signed an interesting order. They have entered into MOU with MSKT Cranes and Components. Generally, we don't talk about cranes when GRSE is in question, but there's a very interesting MOU. And why this MOU has been signed? That's for the marine, defense, shipyard, cranes and associated equipment. That's an ancillary segment, but remember, this is the high margin products when the ancillary services or products come in compared to the main product. But there are key concerns in the shipbuilding industry. That is why it has come out of the investor interest. The first one is the execution risk. That's where the concern lies. And the order flows, they might be hitting their peak. Of course, we saw the sequential numbers also coming down. Other concerns are also that the institutional selling has been seen in the previous quarters. And I'll show you the details in the DIs as well as the FIs, what's happening there. Technical analysts say that sector is expected to remain range bound, or maybe a little bit of price correction could come in. So that is something which we will also be looking out for. But there are concerns about this industry. But nevertheless, it's my job to understand and explain you what's ailing the industry. But let's talk about the KYC show. There are 8 ratings where we judge a company. And of course, it's the numbers. There is income statement, balance sheet, cash flow, return ratios where we get the company in. But apart from that, we also see the shareholding pattern, which I discussed. Where is the institutional participation going? And the street cred. If you're holding the stock for 1 month, 6 months, 5 years, how much returns have you made? Valuations, we compare them with its peers. Of course, the company has 2 major peers. I'll get you those information. And analyst tech. Are the analysts still bullish on the stock despite the stock, doing nothing in the last 6 months? All of these queries, I will answer it one by one. Let's talk about the first parameter, and that is the income statement. Of course, remember the Q3 numbers have also come in. And largely, we see how the 3-year CAGRs are there. It's extremely good, 40% plus, be it the income statement, be it the EBITDA, be it the PAT, and see the growth coming in. And that is where the interest lies for the investors. Let's pull up the Q3 numbers also to see what has happened. Margin growth has been significant, and that's what I've been liking it. There's an operational leverage at play, but top line growth is also very strong. So income statement, all cylinders are firing, and of course there is no reason not to give any other number to it. And the margins also, that has also gone up to 9.1%. This is a decent uptake coming in. So you see, this can even hit a 10% mark going ahead. And that's what we'll be asking the management. But right now, for income statement, we will be giving it a strong thumbs up. Let's look at the balance sheet. What happens here in balance sheet? Generally, balance sheet of these companies are very tightly done up. And remember, the total equity reserves are very strong. The borrowing, that has actually come down, and that's a good sign as well. But apart from that, we see how the cash flows are. I mean, the cash balance, that's roughly 3,700 crores. Not major change has happened. Net, it is a neutral rating when it comes to the balance sheet as well. There is nothing great about it, but nothing bad about it as well. But let's talk about the cash flows. That's where my concern starts coming in for this type of industry. Remember, there's an execution risk. There might be delay of payments, and that is why the cash flows might look good there, but the concern starts coming here. That is where we see in FY24. Also, the cash flow, this is not total equity. This is the cash flow actually. So just an error, but you just see the flows from operations. It is not a straight linear line. There are a lot of variations, and the business model is as such. That is why. And right now, for the current numbers, of course, the cash flow, I would say, is on the negative side. But the return ratios, let's look at that. Return ratios have been very strong. For a company like this, at least a 20% plus return ratios is necessary, and they have maintained it in FY24 itself. But see the growth coming in 2018, FY25, FY26, it's around 34%. And it's maintaining it for FY27 as well. So 30% plus is what the brokerages are estimating for the return ratios, and that is showing strength. Let's just pull out the other return ratio as well. ROE we spoke about. Another is ROIC, return on invested capital. That also we see a significant growth is coming in 27% in FY25. Is expected to be around 30% plus for both the years, for FY26 and FY27, and that is where we see the street is very bullish on when it comes to the return ratios. So right now, I would be giving the return ratios a strong thumbs up when it comes to my analysis for KYC. But let's talk about the shareholding pattern. You know, shareholding pattern is very much important, but as of late, there has been some institutional selling. Let's just show you the shareholding pattern, how things have moved. Of course, 75% stake is untouched, which is owned by the government, but the action is here. FIs had 3% stake, and it's largely stable in the month or the quarter ended of December. But the concern is it was 6% here for the DIs in March 2024. And then we see it has come down to 2%. That means a 4% downtick in terms of selling of stake coming in the March month, and then in December also there hasn't been much increase as well. That means the concern is there on institutional selling. FIs are strong, promoters decent. The retail absorption has gone up by 5% from 16 to 21%, but net shareholding has been on the lower side, so it's a thumbs down when it comes to the shareholding pattern. Let's talk about the street cred, and to put that in perspective, street cred is nothing but how the share price has moved around. And remember, if you are a shareholder for the last 6 months or you have entered after that, the entire industry has been under pressure. That's why in year-to-date basis it's been flat, and you could say last 6 months also it's been flat. That's where you might have been trapped had you entered in these times. But if you are a long-term shareholder, congratulations to you. Even for a 1-year basis, if you are holding the stock, you have made 62% returns on your portfolio. And if you're a 5-year investor, the rally which we saw in the shipping stock, then congratulations, 1165% return. So short term, there's a disappointment. Long term, it's a very big joy. So on that basis, I've given a neutral rating when it comes to the street cred. Also, apart from street cred, let's talk about how the valuations pan out. Valuations, they are of course having two immediate peers. There is Cochin Shipyard and Mazagon Dock, where we'll compare the 12-month forward P ratio to give you the perspective. But remember, all of these ratios which are there, they're already, all of them are down by almost 40 to 50% from their peaks. So currently, these are the ratios to look at. Cochin is still a bit expensive. GRSE and Mazagon Dock almost even Stevens. That's around 31 times the P ratio is coming in. But despite it being one of the cheapest, is there actually value in the industry? Will they give the multiple what they were giving this multiple in 2024? I think it will take more time. And because of that reason, I will be giving this a neutral rating when it comes to the valuation picture with the peers. But let's talk about the analyst take. What are analysts suggesting? And it seems like some analysts are on the sidelines, some have given a sell call, and while some still remain positive and give a buy rating. So majority of them are still giving a buy rating, and the stock has corrected or hasn't done much. It's in a range bound mode, in technically speaking, for a lot of months, almost 6 to 8 months. So there is a likely return in the next 12 months for 20%. So that's where I think there is some kind of a hope going ahead. And hold and sell is definitely there as well. So it's a neutral rating from this side. But of course, let's talk about the final rating for the company. You know, we spoke about the numbers, the outlook, the industry, and why, you know, it's the shipping industry is right now out of flavor for the investors. I've given you the reasons. But let's just see on the company specific focus what's there. Income statement has been strong. Return ratios has been strong, but the execution risk at times change into, you know, very volatile cash flows, and that is where my concern comes for this company. But moving ahead, shareholding, the institutional participation, especially the DIs have reduced. Street cred, short-term questions. Long-term, it has been a massive multi-bagger on the valuations front. all of the peers have corrected 30 to 40% from their peaks in 2024, and analysts are also divided. 4 of the analysts have given a buy rating, but the remaining 3 are still on a sell or a hold. And overall, it's a very, very neutral rating I've given. It's a 4 out of 8 for Garden Reach Shipbuilders. So that'll be pretty much interesting. And of course, joining us would be Commodore PR Hari. He's the chairman and managing director at GRSE. And of course, a lot of, he has a lot of achievements also under his belt. Very, very good afternoon to you, sir. So first question, Hari sir, is your Q3 earnings. It was a very strong set of earnings which had come in. If you could just give us the key reasons on that.
Thank you, Sharath. At the outset, I think I have a tough task because you have just rated us neutral. 4 out of 8 is definitely in my standards poor score, and my endeavor in the next few minutes that you give me would be to perhaps influence your impression. The Q3 has been good for us. Revenue has moved up 49%, and so has the profit after tax by 74%, and that is that has been an interesting quarter for us. Specifically, why we have achieved good results, or rather, I would say excellent results, is because of the fact that our major projects, that is the P-17 Alpha and the anti-submarine shallow water craft, these projects are at a stage where the revenue accrual is at maximum. That is actually the reason why the performance has been good during the quarter. So in a nutshell, the financial year so far and especially Q3 has been good for us, but I can assure you better times are to come.
All right, better times to come, but the margin front, that has seen a significant up move. Hari sir, I was just checking all the margins all throughout. They have been doing really well. It's almost at the cusp of that double-digit margin. It's at 9.1%, if I am not wrong. Will we see that 10% mark maybe in the next 12 months, 18 months? Is there any lever to it?
See, the major project, that is the P-17 Alpha project. As you are aware, we have already delivered one ship ahead of schedule. The second second ship is due for delivery in a couple of months, and the third ship also would be ready for delivery during the next financial year. So in the next, that means from now till the next financial year, we will be able to maintain similar margins. And so has the anti-submarine shallow water craft project, that is also a profit-making project. This project has also reached a stage where we are accruing revenue, and so the profit margins, to answer your specific question, we will be able to maintain similar margins in the coming quarters too.
So, Hari sir, if I'm not mistaken, it will be between 9 to 10%, or will we see it going past the 10% mark?
It will be around the similar margins that we achieved in this quarter, around 9 to 10.
Okay, fair enough. But Hari sir, there are concerns in the industry, and that's what, speaking from the market perspective, is the execution risks. There is the execution risk which come in, and at times it impacts the cash flows also going ahead. And that's what's happening in the shipbuilding industry as well. The order flows earlier used to be very big, but now they are small, MOUs are coming. What's your view on it? Is it the industry-specific problem which is coming in, or do you think that this has bottomed out, whatever over the last 12 to 16 months we saw?
A very interesting aspect that you brought out, that shipbuilding industry perennially has got this, I would not say an issue, but this is a peculiarity of the shipbuilding industry where the order book is high, but the execution period ranges from a small project, let us say 18 to 24 months, to a big project worth about 6,000, 7,000 crores per ship. The project execution duration could range between 4 to 5 years. As far as the execution rate or the delivery rate is concerned, I'll just like to put this in a perspective. In the last 9 months, the first 9 months of the current financial year, GRSE has delivered 5 warships of 3 different classes. And I can assure you that in the next 3 months, we will be delivering 3 more platforms, which means in a year, that means in a span of 12 to 13 months, 8 ships is good by any standards, be it domestic or global. And I presume this is the similar condition with all the Indian shipyards. There have been issues, there have been challenges, there have been cascading impact of the COVID, which we think COVID is over, but there has been a cascading impact which affected the supply chain system for over 2 to 3 years. It is stabilized now, and that is why you see good execution by specifically by GRSE currently. So I feel that the appreciation or the perception regarding risk in execution need to be put to rest. It has bottomed out, as you correctly mentioned. And again,
That's a big
to put
statement.
things in yes, and again to put things in a perspective. Currently, we are executing 10 shipbuilding projects, and shipbuilding is our major revenue earner or the order book component. Actually, 95 to 96% of our total order book is from shipbuilding. And there was a period of time when within this 95% majority, that means around 98, 99% was coming from warship building. That situation has also changed. Today, about 80% is coming from warship building, and the balance 20% is coming from non-defense shipbuilding, both the domestic and export.
Right.
Just to give you a
Yes, sir.
positive note, our current order book stands at 18,482 crores. This is a reflection of the execution rate. The last 5 years, our order book has never dipped below 20,000 crores, and this is the first time it has dipped below 20,000 crores, and I consider it as a very positive sign. Why positive is because that means the execution is moving along well. When we started this financial year, our order book was around 22,650 odd crores, and currently, as I mentioned, is 18,482 crores, which means we have already in the 9 months accrued revenue, that is our revenue from operations in the 9 months stands at 4,883 crores. And we matched it with an order coming in, small orders, but totaling to around 4,198 crores. What I was talking about, the positive
exactly.
note is that we intend ending this current financial year with an order book position close to around 50,000 crores, as we are in the final stages of concluding the next generation corvette project.
And
so
Hari,
we expect the contract to be concluded sometime in March.
Right. And Hari sir, one more question is on the expansion plans. There is a brownfield expansion plan. There's a greenfield expansion plan. If you could just give our viewers the entire picture of, what's the timeline about it and any kind of, the manufacturing capacity going up for the important ships.
Sure. The current shipbuilding capacity is for concurrent construction of 28 ships. And with the ongoing modernization within our geographical limits, which is already going on, we intend increasing it to 32 ships, medium, large, and small, by the end of the current calendar year. Yes, we are going in for brownfield as well as greenfield expansion. The brownfield expansion will be across 3 locations within West Bengal. The work has already commenced, and we intend putting these facilities to operational use by the end of this calendar year. As far as the greenfield expansion is concerned, we have formulated action plan for 2 sites in Gujarat. One for a dedicated shipbuilding and ship repair facility, and second, a ship recycling and shipbuilding facility, which is going to be very interesting. But these naturally are being greenfield expansion. We expect this to take shape in such a way as this can be put to operations in the next 3 to 4 years. This is broadly our expansion plan. And with this expansion, both brownfield and greenfield, beyond the 32 ships what I had committed by the end of the current year, our intent is to enhance this to 40 ships, large size ships, to meet the demand that is coming, which is both from the defense as well as the non-defense segment, especially from the Ministry of Shipping.
That's pretty much interesting. And I was just looking at the background where you're sitting, and a child in me is just looking at these amazing vessels which are there behind you. But to put in perspective, a lot of international announcements are coming. French president will also be coming, and we know a lot of deals, or you could say tie-ups, we can expect internationally also. So if you put GRSE in the international business perspective, and of course our products are really strong, so what is your view on it, in terms of tie-ups, going ahead?
As far as international opportunities for shipbuilding. I'll again break this into two segments, the defense and the non-defense segment. The defense exports, especially for warships, are government driven. Most of them are either through line of credit or G2G grant. So here we expect a momentum to garner through the visits and the interactions between our government and the various foreign governments. As far as commercial shipbuilding is concerned, this is where it is directly under the control of the shipyards. As you are aware, we are currently executing a project for a German client for 12 multi-purpose vessels. We started in a very modest fashion. Our initial contract was for 4 ships. Then they saw the progress increase it to 8, and subsequently it is 12 ships now. Now the European clients, the international clients, especially the European clients, are looking at India as a commercial shipbuilding hub. Almost all the Indian shipyards have orders from these European clients, and we expect more opportunities, especially for vessels which are, let us say, challenging in terms of building, like hybrid vessels, neutral energy vessels. So this is an area which we see GRSE getting opportunities, especially for the European market.
Right, Hari sir. Thank you very much for taking out your time and explaining us and clearing a lot of misconceptions which are there in the industry as well. Best of luck for the future and for GRSE as well. Thank you very much, sir.
Thank you. Pleasure.
Well, that was the management for GRSE, and they did clear a lot of air regarding the execution risks in the industry as well. And it was very interesting to have a chat with them. But that's all, folks, for KYC. Stay tuned to NDTV Profit.